Hello everyone, I hope that you all are fit and fine, and let me tell you that I am completely fine as well. In this video, we are going to discuss the multiple choice questions that are given in the revision test paper, that is RTP, for CA Intermediate Income Tax May 2023 examinations. Okay, we are going to discuss only the multiple choice questions because for the descriptive questions, answers are already available in the RTP and you can refer. However, for the multiple choice questions, only the options, that is the right answer, is given. How to derive those options is not given. Hence, let us discuss those multiple choice questions. But before beginning the lecture, my request to you is to like this video and also share it with your friends so they can also take the use of this lecture. So firstly, let us start with the case study based question that is given in the RTP. So what is the case scenario? Kishore and Sons is a dealer of coal. Okay, its turnover for financial year 21-22, that is the preceding previous year, is how much? 12 crore rupees. The state government of Hyderabad granted a lease of coal mine to Kishore and Sons on 1/5/2022. During the previous year, it has granted a lease. Who has granted? Government of Hyderabad has given, see here, Government of Hyderabad has given the mine rights to Kishore, and Kishore will pay lease to the government. Correct? Now, and charged 11 crores for the lease. So lease is how much, Kanna? Lease is 11 crore rupees. Lease is how much? 11 crore rupees. Now, Kishore and Sons sold coal of 95 lakh rupees to BAC and Co. So Kishore has sold coal of 95 lakh rupees to whom? BAC and Co. Fine. Then during the previous year 22-23. XYZ Limited purchased coal of 55 lakh rupees from Kishore and Sons for trading purpose in July 2022. So Kishore and Sons also sold coal worth rupees 55 lakh rupees to whom? XYZ Private Limited, or XYZ Limited, not XYZ Private Limited. This we will cut. Okay. Now, turnover of XYZ Limited during the last previous year was 12 crores. So turnover of XYZ Limited last previous year was more than 10 crores. Okay. PAN is duly furnished by buyer and seller to each other. So all the buyers and all the sellers are given each other their PAN number correctly. Details of sale payments, sale to and payments from Messrs. BAC and Co. by Kishore and Sons are as follows. Okay, so whatever payments are given by BAC and Co. to Kishore and Sons of 95 lakh rupees split up is given in this tabular column. Now, turnover of BAC and Co. during the previous year 21-22 was 11 crores. So for everyone, that is Kishore and Sons, for XYZ, for BAC, for all of them in the preceding previous year, their turnover was more than 10 crore rupees. The above amounts were credited to Kishore and Sons in the books of accounts, in the books of Messrs. BAC and Co. on the date of sale. Messrs. BAC and Co. furnishes a declaration to Kishore and Sons that the coal is to be utilized for generation of power. So this is the case scenario. Based on this, we have to answer the questions. First question is what? Who is required to deduct or collect tax at source in respect of lease of coal mine by the state of government of Hyderabad to Kishore and Sons, and at what rate? So first and foremost, is mine given for lease covered under TCS or TDS provisions? Answer is yes. It is covered under TCS provision. What did we learn? We had learnt in class that in case of granting lease or license of a parking lot, toll plaza or mine, the TCS rate is how much? 2%. 2%. So who has given on lease? State government of Hyderabad has given on lease. It is only receiving the lease. Hence, along with 11 crore, the state government of Hyderabad also has to receive a lease of 2%. 11 crore multiplied by 2% it has to receive from Kishore and Sons. So answer is state government of Hyderabad is liable to collect TCS of 2% on 11 crores. Next, is Kishore and Sons required to collect TCS in respect of sale transaction with Messrs. BAC and Co? If yes, when and what is the amount of tax to be collected? So listen. What is the transaction between Kishore and BSE and Co? Kishore has sold coal worth rupees 95 lakhs to BSE and Co. Now, is coal sale covered under TCS provision? Is it covered under TCS provision? Answer is yes. We had learned that sale of coal is covered under TCS provision and the rate of TCS is 1%. How much rate? 1%. But we had also learned section 206C1A where we learned that in case of sale of coal, TCS will not be applicable if the buyer is a resident and also furnishes a declaration that such goods are being used in manufacturing or power generation. Fine. So in this question, does BSE and Co give a declaration that they are engaged in power generation and they will use the coal in power generation? Answer is yes. Okay. Since they are giving a declaration, Messrs. Kishore and Sons need not collect TCS because BSE and Co is giving the declaration. Okay. Hence the answer is no, Kishore and Sons is not liable to collect TCS. And one more point, be very clear, TCS itself is not applicable. You cannot say that since TCS is not applicable on this transaction, you will apply TCS under 206C1H. That is the TCS on sale of goods. You know why? Because after, okay, let me tell you the ranking. So first rank you will give to what? You will give to TDS provisions other than 194Q. Second rank you will give to TCS provision other than 206C1H, that is TCS on sale of goods. Third rank you will give to TDS under section 194Q, and fourth rank only you will give to TCS under section 206C1H. In the transaction that we had seen, in the same transaction, TCS on sale of coal was applicable. But TCS is not required to be collected because the person is giving the declaration. BSE and Co gave the declaration that they are using the coal in the power generation process. Okay. Hence, this TCS is not applicable. Next comes what? TDS under 194Q. Since TCS was not applicable, TDS under 194Q will be applicable on that transaction. You get my point? So let us see the next question. Is Kishore and Son required to collect the tax at source in respect of sale transaction with XYZ Limited? If yes, what is the amount to be collected? Now listen. To XYZ and Co. XYZ Limited also, there is a coal sale of 55 lakh rupees. On this 55 lakh rupees, is TCS applicable? Answer is yes, because XYZ Limited is not giving any declaration that it will use in manufacturing or power generation. Hence, TCS has to be collected. What is the rate of TCS? 55 lakhs multiplied by 1% is the TCS rate on coal. Hence, it will be how much? 55,000. Is there any limit? Answer is no, there is no limit. On the entire transaction, 1% is the TCS rate. So answer is yes, and the answer will be 55 lakhs. Next, is BAC Co required to deduct tax at source in respect of the purchase transaction with Kishore and Sons? If yes, what is the amount of tax to be deducted? So hence, what I told you, that if TCS other than 206C1H is not applicable, see whether TDS under section 194Q is applicable. When will the TDS be applicable? If the person who is purchasing the goods, okay, their turnover in the preceding previous year should be more than 10 crores and the value of purchase should be more than 50 lakh rupees. Since both the conditions are satisfied, TDS under section 194Q is applicable. You get my point? Now, how will the TDS be deducted? On the first 50 lakh, there is no need to deduct any TDS. On the amount in excess of 50 lakhs only, TDS has to be deducted at 0.1%. How much? 0.1%. And TDS is deducted on payment or credit, whichever is earlier. So now let's come to the table. In this, On the first transaction, that is 35 lakhs, no need to deduct the TDS because it is within the 50 lakh limit. Then let's come to second transaction. First transaction plus second transaction both put together will become how much? 60 lakhs. So on 60 lakhs, first 50 lakhs no need to deduct the TDS. Balance 10 lakhs, TDS will be deducted at 0.1 percentage. So it will be how much? 1000. And what will be the date of deducting? Payment date or purchase date, whichever is earlier. Hence you have to take the earlier date, that is 30th June. Okay. So on 30th June, TDS of 1000 rupees has to be deducted. Next point. Next, 8 lakhs is the amount. Since limit has been crossed, on the entire amount, TDS has to be deducted at 0.1 percentage. So TDS will be 8 lakhs and date will be whichever is earlier. So it will be 25th October. Next case, on 15 lakhs also 0.1% comes to 1500 rupees. It should be deducted on whichever is earlier, so 20th January. And lastly, on 12 lakh rupees, TDS has to be deducted at 1200 and the date is 15th February 2023. Hence the answer is 1000 on 30th June, 800 on 25/10, 1500 on 20th January and 1200 on 15 February 2023. You get my point? Next. Assume for the purpose of this multiple choice question that Messrs. BAC and Co's turnover for the financial year 21-22 was only 9 crores. Who will be required to deduct or collect tax at source in respect of transaction between Kishore and Sons and Messrs. BAC and Co, and at what rate? Now listen. In this, what did I tell? If TCS other than 206C1H is not applicable, then TDS under 194Q will be applicable. Now what are they telling? That the turnover of BAC and Co for the preceding previous year is less than 10 crores. Since it is less than 10 crores, will TDS under 194Q apply in the last question? Answer is no. It will not be applicable. So TCS also not applicable, TDS also not applicable. Now since TCS under other than 206C1H was already applicable, that was exempt. Hence, you should not apply the other section of TCS, that is 206C1H. You get my point? That is why neither Kishore and Sons is liable to collect TCS nor BAC and Co is liable to deduct the TDS. Okay, that is the answer. So one thing you have learned from this last question, that now just because the coal TCS is not applicable, you cannot come and say that the TCS will be applicable on sale of goods of 50 lakhs or more. Fine. So this is the case law. Now let us come to the questions, other remaining questions. First question is question number 6. Mr. Virat has a house property in Chennai which he let out to Mr. Sumit for acquisition of his house. Mr. Virat has taken a loan of 30 lakh rupees at 10% per annum on 1/4/2016. So Mr. Virat has given his house in Chennai to Mr. Sumit on rent. Okay. For this purchase of this house, he has taken a loan of 30 lakh rupees at 10% interest. He has also taken a loan of 5 lakh rupees at 12% interest on 1/7/2022 for repair of the house. He has not repaid any loan so far. What will be the interest deduction under 24B? Answer is, in case of let out property or deemed to be let out property, there is no limit on the interest deduction. Whatever is the interest on house property can be claimed as deduction. So what is the total interest? 3 lakh rupees, that is 30 lakh into 10%, and 45,000 rupees will be the interest on 5 lakh, that is for 9 months. Correct. So total interest is 3 lakh 45,000. Entire 3 lakh 45,000 will be allowed as deduction. Now let's come to question number 7. Mr. Rishabh, aged 65 years and resident in India, has a total income of 4 crore 50 lakhs, comprising long-term capital gain under section 112 85 lakhs, long-term capital gain under 112A 75 lakhs, and other income 2 crore 90 lakhs. What is his tax liability if he has opted for 115 BAC? So we have to calculate the tax under the new tax regime. Okay. First and foremost, In the new tax regime for an individual, is the higher basic exemption limit available? Answer is no. Hence, even though age of Mr. Rishabh is 65 years, the basic exemption limit will still be 2,50,000. Okay, so that is the first point. Now, this is the calculation of the tax. On 4 crore 50 lakhs, you have to divide into 3 parts, correct? Section 112, Section 112A and other income. Okay. On Section 112, you will apply 20% tax because the income is taxable at 20% long-term capital gain. On 112A, first 1 lakh rupee income is exempt. On the income above 1 lakh rupee, you have to tax at 10%. So tax comes to 7,40,000. We had learned that the maximum surcharge on 111A, 112, 112A and dividend income all put together is only 15%. Hence, surcharge should be taken at 15% since the income is more than 2 crores. So maximum surcharge for these incomes will only be 15%. So apply 15% surcharge. Now let's come to the normal income. In case of the normal income, up to 2.5 lakhs, no tax. More than 2.5 lakhs, up to 5 lakhs, 5%, then 10%, 15, 20, 25 and 30. On the entire last amount, which is above 15 lakhs, 30% will be the tax. After calculating the tax, you will get 84,37,500. Since other income is more than 2 crores, so surcharge will be 25%. So 25% surcharge comes to 21 lakhs. 9,375. Now all the tax and all the surcharge amount we have to add. After adding all of them, you will get 1 crore 33 lakh 52,875. On this you have to further add health and education cess. You will get the final answer as 1 crore 38 lakh 86,990 as the answer. Okay. So I hope you are clear. Now let's come to question number 8. Mr. A is engaged in the retail trading of toys and he has acquired a motor vehicle A for 4 lakh rupees on 20th August 2020. He put to use on 4th October 2021, that is in previous year 21-22. The car was put to use. Another motor vehicle B for 3 lakhs was purchased on 19/2/2021 and it was put to use on 3/9/2021. So this vehicle also was put to use in previous year 21-22. Okay. On 1/4/2021, Mr. A took a vehicle loan of 5 lakh rupees at 10% per annum interest and acquired a motor vehicle C for 5 lakh rupees on 31/5/2021, put to use on 30th June 2021. On 30th July 2022, that is during the previous year 22-23, he sold the vehicle for 5.5 lakhs and again he purchased it back for 6 lakh rupees on 28th August. Assuming the above mentioned assets are the only asset in the block, what will be the total depreciation for 22-23? So we have to find out the depreciation for 22-23. Before that, we have to know what is the closing WDV for 21-22, correct? To find out closing WDV, we also have to find out the depreciation for 21-22. So let us find out. So opening balance is taken as 0. There are 3 motor vehicles that were purchased. Okay, 2 of them were purchased in 2021 itself. However, they were not put to use in 2021. That is why there was no depreciation in 2021. In 21-22, since they are used for 180 days or more, full depreciation will be allowed for both the vehicles, that is A and B. Now let's come to C. C was purchased for 5 lakh rupees. However, a loan was taken to purchase C. We have learned that if a loan is taken to purchase an asset, then the interest paid on such loan till the asset is put to use will be added to the cost of the asset. Hence, interest on loan till 30th June, that is 3 months, that is 12,500. 5 lakhs multiplied by 10% on 3 months, that is 12,500 will be added to the cost of the vehicle, that is C. Okay, so total is coming to 12,500. 15%, that is full rate of depreciation, you will put 1,81,875. The closing balance or the WDV as on 1/4/2022 is coming as 10,30,625. Now what they have told, they have sold the vehicle, that is C. Sale value is 5,50,000. So you have to reduce the sale value. Now that same vehicle they have purchased once again. We have learnt in special cases when it comes to cost of the asset that if an asset is sold and bought back, then the cost of acquisition of that asset will be the actual purchase price or the WDV which was there in the business, whichever is lower. 1 second. Yeah. So what is the actual purchase price karna? 1 second. What is the actual purchase price given in the question? Purchase price given in the question is 6 lakh rupees. And what is the WDV? The WDV is 5,12,500 minus 15 percentage. That is the depreciation in 21-22. So closing WDV is 4,35,625. You should take the purchase price as 4,35,625 or 6 lakh rupees, whichever is lower. Correct? So what will be the amount? 4,35,625. Explanation and all I had given you in the class, that to avoid the malpractices or unfair practices by the assessee, the provisions of actual cost are there in the Income Tax Act. So you will take the purchase price as 4,35,625. Total how much? 9,16,250. On this entire amount you can put 15% as depreciation since it is put to use for more than 180 days. So depreciation will come as 1,37,438. Hence the answer is 1,37,438. With this, all the multiple choice questions in RTP are over. All the descriptive questions also definitely I would like you to solve so that you will be best in your preparation. Okay. Wish you all the best of luck for your examinations. See you in the next video, dear. Till then, take care. Bye bye.